Hey, Puppy Trades! I wanted to do a video analysis update. Echo check, echo check. I wanted to do a video analysis update on Goldman Sachs and Morgan Stanley because there's, a little bit of a debate going on in the Elliott Wave community, and obviously, what's happening to Goldman Sachs and Morgan Stanley is going to affect SPY because, believe it or not, I think someone posted a chart today that said that this is the most growth, has outperformed value in a long time, that they've diverged. And we've seen that reflected in the NASDAQ really outperforming SPY in the past few months. And so, what happens to these financials ultimately is going to, play a big role in the direction of SPY in the future. So, I talked about my last video how there was this idea with SPY, and I gave the evidence of why I thought it could happen. There was this idea with SPY that if we zoomed in, we had this opportunity for it to form a wave one and a wave two, then another wave one and another wave two from this low, and we're getting very close to, entering that wave three, breaking above 418.31. And what I also said I was looking for was down here for the daily RSI. There's a rule in Elliott wave theory that basically suggests if SPY does go break above this daily RSI high, because wave 5 must end with momentum divergence, if we see SPY's daily RSI get into the 70s, that would suggest from an Elliott wave theory perspective that this is not 1, 2, 3, 4, 5 waves, big correction. It's wave 1, wave 2, another wave 1, another wave 2, wave 3 of wave 3 being entered. So I gave the evidence that Microsoft and Google had been pointing to doing a very similar thing. Well, there's a little bit of a scenario going on with Goldman Sachs and Morgan Stanley that could be quite similar. So what are the what's really the base of the argument right now for both of these stocks is that if we take the length of this decline, the bears are saying this is wave A. This is a wave B counter trend rally. And so they're saying this wave B high isn't going to get broken. And we're going to go the length of wave A placed at the wave B high. And that's going to take Goldman Sachs down to an equal legs target for wave C, which is about 390. So we'll talk about some other charts that may suggest that won't happen. It certainly could, but really, that's not the position that I have about Goldman Sachs and Morgan Stanley. Technically, I suspect this is an ABC correction, and that this ABC correction has already ended. And so what I'm looking for is that very similar to SPY, very similar, it's not, I'm not, I told myself I wasn't going to correlate tech and financials. All right, I told myself that. And I don't think, I don't think, even though they're the two biggest sectors in SPY, with healthcare and I think it's still another consumer sector, might be consumer disco. We have seen tech move from financials quite a bit. I think Goldman Sachs is suggesting we can see financials kind of start to play catch up to tech. That's and that's just what I suspect is going to happen from an Elliott wave theory standpoint, because I think very similar to SPY, this is a wave one and a wave two, and then this is another wave one and another wave two. So we've kind of ended a daily ABC correction, in my opinion, And what I really love about Goldman Sachs is that it gives great levels. It's one of those charts where, the bulls know exactly what the bears think. And so there's really nice levels right now for the bulls to, kind of call the bluff against. A nice invalidation for this is 287.75. A wider invalidation, which still isn't even really that wide from a risk reward standpoint, is 277.84. So, I would say this low is going to be pretty important, 287, but 277 not being that far away is very interesting. So what I can do is I can take the extension of this wave one, and I kind of know from an Elliott wave perspective what the expectation is. That 161.8% extension is all the way up there in the 450s. That's quite a bit away. The equal legs target for Goldman Sachs would just take it up to the 400s. So even within a kind of daily cycle, there's this idea Goldman Sachs can go wave one, wave two, and begin wave three. And that's going to be the Elliott wave expectation above 287.75, especially 277.84, that a wave three could be entered. And that we could even subdivide this even a little further. Now, this would be getting cute. And one reason I don't like doing this is because a lot of people don't understand that in Elliott wave theory, if I suspect there's going to be a wave four correction, I'm not supposed to trade that. I'm not supposed to go short. It may be something to think about for rebalancing and, short-term profit taking. But really, there's more. That small degree wave four, I would not be looking to game. But it could look something like this for Goldman Sachs. And what's great about Elliott wave theory is I know exactly what the bears think. And if Goldman Sachs goes and breaks below, 287 and 277, and Morgan Stanley does a very similar, thing. We can look at the Morgan Stanley chart next. I think this is wave one and wave two. And so if Goldman Sachs is above 287 to 277, a wave three can be entered on the daily chart. And also even, it wouldn't just be a wave three, it would be a wave three of wave three. I think I could see the subdivision looking something like this. 1, 2, wave 3 to kind of the lower mid 400s, a shallow wave 4 correction, and a wave 5 higher. And ultimately, that would just be a wave 3 correction, and that would be a place for a shallow wave 4. But anyway, I think that it's a very useful chart. It's certainly one I'm going to be watching a lot. And Morgan Stanley, an almost identical debate going on right here. I think I've got this. Yeah, so I think I've got this marked up a little bit. There's a few ways to look at it. Very similar to Goldman Sachs would be to look for a wave one and a wave two to have ended on the daily chart, and to kind of look for this nest idea as well. So this view, very similar to Goldman Sachs, would be that Morgan Stanley is going to hold above 74.67. A wider invalidation, again, not that far away, 72.05. And the bulls are going to look for Morgan Stanley and Goldman Sachs above not far away levels, but very useful invalidation levels. Very useful downside risk reward levels. The Elliott wave expectation, it's a little more clear for Goldman Sachs, but the same idea for Morgan Stanley is that a wave three of wave three could be entered. And the 161.8% extension could take Morgan Stanley up towards, the upper 110s. Now, I think for Morgan Stanley, there's another way to subdivide it, and so I'll get into that, and then we'll get into a few other financial charts. But if we look at, kind of the nest, the nest view, very similar to Goldman Sachs, is at 74.67 to 72.05 is going to be a great invalidation for Morgan Stanley to enter wave 3 of wave 3. Another way, just for kind of the critics, there's another way to subdivide it. It could look something like this. This kind of leading diagonal idea. And then that was a wave 1, and now it's ending wave 2. The implication is really essentially the same, for it to look something like this. And the bears are going to say the exact same thing. I won't move all the numbers, but the bears are going to say the same thing for Morgan Stanley. This is a wave A. That's a wave B that ended. And so they're going to look for wave C. I've explained that I think there's a little evidence from SPY that won't be the case. The bears are saying that correlation isn't going to play out, and that the banks are going to go crash SPY. I think we look at JP Morgan and Charles Schwab. There's a little hope for financials. It hasn't been all doom and gloom. 1, 2, 3, 4, 5 waves up. Large wave 1, an ABC correction. Wave 2 for JP Morgan, between the 61.8 to 78.6% retracement. And then this has the opportunity to enter a wave 3 of wave 3 as well. I thought the best risk reward for JP Morgan was against the 78.6% retracement and the small wave 2 low. And now I think it's in let the winner run mode. That's wave 1, wave 2, and then JP Morgan could enter wave 3 of wave 3 as well. To say wave 2 had already ended would be 123.11. That would be, moving the stop up quite a bit from the original post, and it wouldn't really be an invalidation. I think Charles Schwab, there's this kind of financial crisis, idea. I think Charles Schwab is saying, I hope this isn't a, Jim Cramer saying Bear Stearns is okay, but I think Charles Schwab is going to end up being okay, at least from an Elliott wave perspective. Large wave 1, subdivided into 1, 2, 3, 4, 5 waves. An ABC correction, where the length of wave A places the wave B high, is where wave C ended, between the 78.6 and 61.8% retracement. 42.60 is a nice invalidation to say, it's not quite 2008, and if it is, then we might see the recovery phase of financials more so than the crash. That was all a fancy way of saying I think that Goldman Sachs and Morgan Stanley, really Goldman Sachs in particular, they're kind of giving a little bit of evidence that Goldman Sachs can hold above 287. Morgan Stanley can hold above 274 to 272. The wider invalidation for Goldman Sachs is 277. And the financials can enter a wave 3 of wave 3 and kind of follow the progress of JP Morgan and even SPY.